Hello everyone, PS from PS Invest Plays here today. Year to date, Matterport stock has risen 330%, but it has shed 30% since November. Many analysts think that it is still overvalued. Is this true? Or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Matterport, ticker MTTR. Matterport is a business in a relatively new market that can be called many things, including 3D capture, spatial data, reality capture, or digital twins. When investors hear that Matterport is a digital twin company, they don't understand. Probably because digital twin is a relatively new term, and not everyone knows what it means yet. However, when most investors hear that Matterport technology can be used with AR, VR technology, they get more interested. And finally, when investors hear that Matterport technology can be used to build the Metaverse, then investors get really excited. Every object in sophisticated 3D video games, 3D training simulations, and other interactive 3D content are currently made by hand in a very expensive process using 3D modeling software. When you really think about it, what is easier? Taking hours to paint a scene or simply taking a snapshot of the same scene? That is the difference between using solutions from Unity software to paint 3D representations of a scene and using the Matterport app named Cortex to take a 3D digital photo of the same scene. In more technical terms, Cortex, when used with a special camera or a smartphone, has the ability to capture a dimensionally accurate photorealistic digital twin of a physical space and turn it into a virtual 3D model. The 3D model has a wide variety of different applications for businesses, and currently Matterport is addressing those applications in 6 different verticals. Among the first and the biggest application that Matterport has found for its spatial data is in real estate, which made up about 2/3 of the company's revenue in Q3. When Matterport first came public in July, they claimed that only 0.1% of existing buildings in the world have been digitized, which is the equivalent of $20 billion in monetizable spaces that have gone undigitized. Matterport is right now in the process of signing up as many of the major residential brokerages and commercial real estate brokerages in the world as they can, as well as all of the major internet real estate portals like Redfin. These major real estate businesses are a great aid in getting more buildings scanned and digitized around the world. In return, both residential and commercial real estate businesses receive great benefits. The benefit for residential real estate is they will be able to digitally market properties more effectively by having the ability to provide virtual 3D tours for home buyers searching for properties online. In commercial real estate, it allows enterprise, large companies, and facilities managers to more easily manage large portfolios of properties by allowing such things as remote access, training, and inspection of facilities from anywhere in the world. There are many more applications for Matterport's spatial data besides simply helping real estate companies. Insurance is currently one of Matterport's fastest growing new verticals. Insurance companies already see the potential use for Matterport's technology in areas such as claims processing, claims assessment, and management. Recently, Matterport partnered with Virus, which has enabled them to speed up the insurance claims process by eliminating the need for claims professionals to manually sketch loss sites. Insurance companies are already requesting a number of value-added add-ons from Matterport to help the whole insurance industry. For insurance, building owners can quickly document a home, asset, warranties, upgrades, personal property, and even keep active records of how the property, its contents, and condition have changed over the years. They can also easily capture a Matterport model on a loss to quickly document things such as subrogation, insurance fraud, subbids, approval questions, and resolution disputes. Besides helping real estate and insurance companies, Matterport has discovered there is an unmet need for its services in the public sector and recently added its newest vertical in late August. By forming a partnership with In-Q-Tel and AWS GovCloud, with the goal of digitizing all government facilities and infrastructure. The market opportunity in digitizing the US federal government is estimated to be upwards of $260 billion in value, according to a study done by the Obama administration in 2017. This estimate does not even include the opportunities Matterport has within local and state governments. As an example of what spatial data could do for local governments, just imagine if local police departments and fire departments are in a situation where they need to enter a public building in an emergency, and they now have access to detailed plans of the building layout, ingress points, egress points, and knowledge where all the critical infrastructure is located. Then imagine that this capability could be accessed by decision makers from a remote location long before a decision is made to enter the building. I have only lightly mentioned just a few verticals and use cases of spatial data. In the grand scheme of things, Matterport has barely started exploring all the potential applications of its technology. I'm quite certain, though, that once Matterport crosses a certain threshold of spatial data collection, then they or other companies will create all types of use cases that could eventually become new profitable business lines, and it is likely that no one has even thought of many of these potential new business applications yet. Additionally, I consider Matterport as a company that has very high optionality. This means that the company has an almost unlimited number of opportunities for building business models around the spatial data being collected. This is important for investors as the stock market often gives above average valuations to companies perceived to have high optionality because of the possibility of upside from businesses that no one has even factored in yet. The most famous example of optionality is Amazon, where the company was continually called overvalued when only the original Amazon marketplace existed. In late June 2021, Facebook partnered with Matterport to help push forward Habitat, Facebook AI researchers' simulation platform that is designed to help robots better understand and safely interact with the physical world. To that end, Matterport will contribute spatial data to the Habitat Matterport 3D Research Dataset, or HM3D, for the purposes of teaching robots and virtual AI assistants to understand and interact with the complexities of the physical world. Since the beginning of November, numerous analysts have speculated that the Facebook and Matterport partnership could evolve into much more, and Matterport could be a huge winner from Facebook evolving into Meta, especially because of the already existing partnership. It is easy to come to that conclusion since all of the digital twins created on Matterport's platform are VR ready. This means that all of the historical buildings, museums, theaters, hotels, etc. that are already within the company's database have the possibility of being used in concepts such as the Metaverse or in other VR-based applications. Now, let's talk about Q3 financials and Matterport's revenue streams. The first thing to understand about Matterport's Q3 results is that most of the metrics that growth investors use to assess a growth company today are lackluster for Matterport. One other thing to be aware of is that the company is in the midst of a transitional phase of moving away from the traditional one-time purchase sales model to a subscription-based model. When other companies have done that in the past, it tended to make year-over-year numbers either look bland or even downright ugly. But companies that eventually succeeded in making that transition have often exhibited tremendous upside. An example of a company that successfully made that transition is Adobe. Matterport has several sources of revenue consisting of product, services, license, and most importantly, subscription revenue. Subscriptions are core to the company's growth strategy, as subscriptions often result in more stable, recurring revenues with a high gross margin. This is why the company made sure to include a slide in its investor presentation, showing that they expect the subscription revenue mix to rise to 86% by 2025, resulting in overall gross margins rising to 73% from 56%. So Matterport is very much a margin expansion story over the next 3 years. As for revenue growth, it is currently lackluster. Q3 revenue came in at $27.7 million, only up 10% from Q3 last year, and missing estimates by $1.49 million. Subscription revenue grew 36% year over year to $15.7 million. This is the most important growth that investors should follow, as subscription revenue is expected to be the overwhelmingly largest portion of the business several years from now, and it is also the highest margin. License revenue was $1 million compared to $3 million last year. License revenue can be very lumpy from quarter to quarter. Services revenue for the third quarter was $3.3 million, up 41% year over year. Product revenue was $8.6 million, up 4% year over year. ARR, or annual recurring revenue, grew to $62.7 million at quarter end, from an ARR of $61.1 million at the end of the second quarter. ARR is an important metric because it is revenue that is expected to repeat. ARR is often considered an indication of a subscription company's health and its future growth. This company's growth in ARR seems lackluster quarter over quarter, but then again, this metric is expected to pick up steam over the course of 2022. Matterport uses a freemium model. In Q3, total subscribers rose 116% to 439,000 from year ago period. Free subscribers grew 136% to 385,000, while paid subscribers rose 35% to 53,000 from the year ago period. The company also increased its spaces under management by 62% to 6.2 million spaces. The company also notes the impact of launching the Cortex app on iOS and now Android. Matterport considers the Android app launch very important, as Android has around 75% market share worldwide. So the launch of Android is one of the things expected to accelerate growth for Matterport next year. Matterport total non-GAAP gross margin for the third quarter was 55%. Gross margin for both subscription and services increased, while there was minimal margin contribution from license revenue in the third quarter. Subscription gross margin was 77%, up 240 basis points from a year ago, which was above company expectations. The subscription gross margin is the more important margin to pay attention to, since subscriptions should be 86% of the business in approximately 3 years. R&D expenses were $7.8 million, up from $3.7 million in the prior year period. The company explained during the earnings call that the growth in R&D spending is planned and is primarily a result of hiring more people in order to increase product development capabilities and throughput. SG&A expenses were $21 million as compared to $9.5 million a year ago. The rise in S&M spend is an effort to create more growth. G&A spend rose as a result of becoming a public company. Operating loss was $13.6 million in the third quarter, compared to an operating profit of $1.9 million in the year-ago period. Non-GAAP net loss was $14 million and diluted non-GAAP loss per share was 6 cents for the quarter, beating estimates by 1 cent. GAAP net loss was $168 million and diluted GAAP loss per share was 86 cents for the quarter, missing estimates by 79 cents. Additionally, Matterport lowered its outlook for full year 2021 total revenue by forecasting revenues in the range of $107 million to $110 million, which is lower than previous guidance of $120 million to $126 million for the total revenue in 2021. Remember, the 2021 full year outlook is up from 2020 revenue of $86 million and up from 2019 revenue of $46 million. Matterport is narrowing the EPS range to a 21 cent to 25 cent non-GAAP loss per share for the full year, from the previous range of 17 cent to 25 cent. Also, it has $600 million in cash or cash equivalents, and it has no debt. Finally, Matterport is a very early stage speculative company. Investors that invest in the company at this point in time need to understand that they are not investing in the company based on current fundamentals, but based on what the company can do in 3+ years down the road. Matterport is a buy, but only for aggressive investors willing to speculate on new cutting-edge concepts like digital twins, VR, and the Metaverse. Matterport is currently a story stock that could easily defy everyone's valuation models. Risk-averse investors should avoid this stock, especially in the current environment, which is uncertain. If you are still interested in this stock, then looking at the charts, I see the stock price to experience some pullback before it increases considerably in the next 6 to 7 years, considering that it delivers on future growth. Now, let's take a look at the chart of Matterport. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart of Matterport, it is very clear that wave 1 has completed, and wave 2, which is the corrective wave, is in progress. I see strong resistance around $19.12 and strong support around $15.50. To me, this is the buy range and accumulation range as well. Once this wave is completed, I expect wave 3 to resume, which is typically 161.8% of waves 1 to 2, giving us a short-term price target of $63.21. After this wave is completed, I expect wave 4 to resume, which is typically 23.6% retracement of wave 3, bringing the price down to $52.72. After this wave is completed, I expect the final leg up, which is wave 5, to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $85.26, which translates into a 452% profit in the next 6 to 7 years. Now, let's summarize. At its current stock price, I would recommend nibbling any pullbacks and accumulate corrections. For me, the accumulation range is between a price between $15.50 and $19.12. I would recommend for you to hold the stock for at least 6 to 7 years, as I see a price target of $85.26, which translates into a profit of 452% in the next 6 to 7 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.